and welcome to the CNBC TV 18 special. I'm Shireen Bhan and we're back at the NASSCOM India Leadership Forum. This is the 20th year of the forum and back here with our usual NASSCOM gang to discuss and debate what the outlook for the Indian IT sector looks like and of course what the global headwinds look like. We've got with us our usual cast of characters. Gentlemen, many thanks for joining us here on the CNBC TV 18 special. Chandra, I want to start by asking you, because you've made a statement this morning saying that the NASSCOM forecast is on the conservative side. You know, when everybody's talking about headwinds and everyone's talking about uncertainty, to hear you say that gives people a lot of hope.
So I think, Swami's here. NASSCOM usually gives an estimate based on what they hear from member companies.
Yeah.
And the good thing is NASSCOM has got a terrific track record, because every time whatever they've projected, they've beaten that, sometimes by a better margin, sometimes by a slender margin. To that extent, the 11 to 14% guidance is good. I hope that we come out at least at the top end of that estimate. But personally, what I feel is that it's an environment which is rather difficult for people to predict. So companies are making their projections based on their own assumptions. But what I see on the ground and what I believe will happen, I think technology has a huge role to play in this whole recovery process.
And which is what is giving you this optimism and confidence.
Yeah, and that's what I see on the ground. And it's quite difficult to just be negative when you don't have any data points to be so negative on the ground. But on the macro side, there is enough things for you to be negative.
Okay, I'm going to get NASSCOM to respond to that in just a bit, but let me get Naushir and Pramod into this as well. Naushir, do you also believe 11 to 14% is perhaps a tad too conservative? Because if you look at TCS, you look at Cognizant, you look at all the other big four technology companies, they're all guiding for much higher growth than that.
Yeah. But I think we've had a history, Shireen, of this industry where the big four, if I might say, or big five, whatever, the top tier, have always consistently outperformed the industry average. So I think that's nothing unusual. I think what Chandra is saying is true. What we are seeing is a very customer-to-customer game. But in general, or client-to-client game. But I think in general, you'll find that the mood at a macro level is far more gloomy, if I might say so, than what we are currently seeing in terms of what's coming through in order books and client demand. So I think the picture on the ground today would currently point to what NASSCOM has said, or perhaps slightly even more than that. And as long as we don't have a cataclysmic sort of event happening globally, I think we'd probably hit that.
Okay, Pramod, do you want to come in on that? If we see a catastrophe, Greece, at least at this point in time, seems to be off the catastrophe radar for now. But unless there is another catastrophic event, do you believe NASSCOM is going to be forced to revise upwards its guidance?
I think uncertainty drives caution. And that's really what's happening. And there's a lot of uncertainty in the world, in the macro world. Greece, and we talked about the impact of Japan and the tsunami that has had. Is the U.S. recovery real? Is it unreal? Is it going to happen? How fast will it happen? So I think that is driving a sense of caution, and broadly I absolutely agree. On the ground, what is interesting is offsetting all these macro things are huge changes in technology that are driving people to embrace it more and more, and huge changes in thinking about outsourcing and processes and capabilities, which is driving companies to think very differently about the way they would run and manage their companies. So the benefit of this added pressure that we've seen over the last few years is companies are now changing the way they think. They're changing the way they think about speed to market, customization versus standardization. And that, I think, is where I think Chandra was coming from in terms of being able to drive more demand. I don't know that anybody in this environment is willing to stick their neck out and put a bigger number there.
Okay, so you're saying you're being cautious at this point in time, perhaps if things were to improve as far as global macroeconomic sentiment was concerned, there would be an upward revision. But is it very different for mid-tier and smaller IT companies in India? Chandra and Infy and Cognizant may be the exception. Is it very different for the small and mid-tier companies?
As we mentioned, I think the fundamentals of this industry remain strong. Our customers are doing well. They have cash balances. Most of them are transforming, and their transformation is led based on process changes they're making, the technology adoption they're doing. But I think there are all these factors that are there. I don't think ever before you have had a situation where you have a US election, French election, uncertainty in EU. While we don't do work in Russia, but I think the change or the elections there, our own elections. So I think all that is creating caution, not only at our end, it's also creating
So
caution.
politics is a big factor this time around.
I would say so, but you mentioned the word forced to. We'll be very pleased to revise it upwards.
I know. You will be very pleased to revise it upwards. We'll be very pleased to see you revise it upwards as well.
So we do think that there are times where there is so much uncertainty that trying to see a whole year ahead, right? When we try to do that if these uncertainties continue, maybe the forecast that we have given, we have never given an as wide a range of 11 to 14.
Sure.
And, also there is one more impact I think we should be cognizant of, that earlier we all used to drive the wave the same way. But I think you're going to find differentiated performances across companies, across sectors, across ownership patterns. So I think the multinationals, the captives, the commercial third-party service providers, I think you would find differentiated. Earlier we were probably all on the same vector. It may not be so.
Okay, I want to talk about that in just a bit, but speaking of differentiated voices and speaking of differentiated opinions, I also want to pick up on the debate that we're currently having as far as IT budgets are concerned. Because if I talk to you, you said that IT budgets are going to move up or at least stay where they are. If you talk to somebody else within the IT space in the top 5 companies, they believe that IT budgets are definitely going to move higher. If you talk to the third company within the top 5 in the IT space, they believe that IT budgets will remain flat, perhaps go a bit lower. Where's the story as far as IT budgets are concerned? Again, depends on who you're talking to and who your clients are.
Shirin, whether you see whether the glass is half full or half empty. At the end of the day, when you talk to clients, I did a poll of a good number of clients, about 120 clients we took, and then we went through in a systematic fashion. And we have shared those numbers. But the interesting point is, in a normal year also, you will always have X number of clients increasing their budget, a certain number of clients staying flat, a certain number of clients slightly declining their budgets. And the pattern is no different.
It's no different.
It's not different. And in fact, 2/3 of the clients I spoke to, we spoke to, have either said that they'll maintain the budget or increase the budget. We have granular data. And the whole reason I kind of cited that example and cited that data point is not because that I wanted to create a very positive scenario or anything. But
there's nothing wrong with creating a
fact,
positive scenario as long as it's
I'm
the
trying
truth.
hard. But establish the fact that there is no need for panic and it's not any different.
Okay.
But if you want to get panic, you can get panic.
Okay, I want to now talk to you about M&A, and I want to talk to you about the opportunities that we see there. If you look at what's happened today, and a conversation that we've been having with the people who are here at the forum, saying that global IT players have expressed interest, global private equity players have expressed interest. You guys are sitting with a lot of cash on your books. There's been a lot of talk about possible consolidation. There's been a lot of talk about acquisition, the search for newer markets, plugging the kind of gaps that you still continue to have in your portfolios. Is 2012 going to be a big year in terms of consolidation and going shopping, Chandra?
I don't know if you talk about the industry perspective. I think different companies will adopt different strategies. I personally don't think that there are going to be a lot of big bang acquisitions because it's not about whether you can afford to buy.
Yeah.
It's about whether you can integrate A. B, second thing is what is the future that you're looking out for. And
what would drive an acquisition at this point in time? Because you talk to Cognizant, they're saying they're looking at an acquisition, the size could be between $50 to $100 million at this point in time. But
those
again,
kind of acquisitions will happen.
Yeah.
I think acquisitions in the range of anywhere from 50 million to 300, 400 million revenue size will happen. Whether there is going to be some really big acquisitions, cross-border acquisitions where there's going to be a huge consolidation, I'm not sure. But I think what will drive acquisitions is primarily capturing new markets. Somebody is not present in a market and they want to capture that market. Or any futuristic place. That is things we don't have capability, and there are startups which have come up in the last 2 to 3 years or 4 years, 5 years, and they've created a critical mass in a particular technology or a platform. Those are or a vertical play. Those are the kind of things that are likely to happen, or some captives. these are the 3-4 things I expect.
What would you look at when you go out shopping? Because you just talked about a war chest at 550 to 400 million. What would you look at when you go shopping?
We are pretty open, and for us the size doesn't matter actually. I think today we are a much larger company, and we are in a position to take on reasonably big size companies if we want to. That doesn't bother us, but I think it's just finding the right target, and any one of those 3 or 4 will fit the bill. But having said that, we've been trying.
Okay, you've been trying.
And we have done a couple.
You have done a couple. Now, Shir, I want to ask you, because there's been a lot of talk on mid-sized Indian IT companies being on the block. I won't name names because this is all unconfirmed stuff at this point in time. We don't have confirmations on whether promoters are actually looking to sell out. We know private equity players who are invested in those companies are looking to sell out. As the environment continues to remain uncertain and as the headwinds continue, do you believe that at least in the mid-sized IT space, you are going to have to see forced consolidation perhaps, or at least private equity players exiting?
Well, I think a couple of things I would say, right? One is that private equity investors exiting and converting is a normal cycle. I think that you'll see it as it comes up. I think that you're going to see 2 kinds of plays in the mid-tier. One is a play from global systems integrators, right, who are finally acknowledging even more that they need to have a global presence. Right, and they cannot afford, if they haven't built it already, to start from scratch. And that is absolutely going to happen. I think is going to continue. The second is an equally, in fact, more interesting play from the mid-size out. Because I think what we are increasingly trying to starting to see is that we're seeing alternative business models being emerged, which are being combined with our traditional services-led model, with a model that includes product, includes data and analytics, it includes infrastructure and IP. And so those kind of combinations where you're acquiring not necessarily one services player going up and bulking with another services player, but you're actually looking at mid-tier to do specific programmatic acquisitions, as Chandra called it. It's not, I'm going to look for scale, but programmatic conversations around a product company, around an infrastructure player, around a data and analytics
so
player.
More inbound deals, more inbound transactions?
And I think outbound as well.
Okay.
Both.
50-50?
That you have to ask about. Or promote. He may know.
Pramod, you did one last year. You, of course, decided to keep Headstrong as is. You're not integrating it with Genpact, But are you continue to actively scout for more?
Absolutely. And we are integrating Headstrong completely. We've just kept the brand as well, which obviously you can do, but it's actually very well integrated at this point in time. Absolutely. We will continue to look for acquisitions that expand our product basket, that allow us to get into new markets perhaps, which would be harder to get into. But we have a nice luxury, companies like us. I go back to what Som was saying. Growth is now differentiated for people. It is going to be harder for smaller mid-scale IT companies which are not growing that fast to get sold. For PE investors to exit. It is harder for them. It is also not obvious as to why the big guys will all come in and acquire a lot of these companies, because they're growing quite well and the integration process is risky, as we know. So I think you're not necessarily, I agree with Chandra, you're not necessarily going to see lots of acquisitions. You're going to see very focused, pointed acquisition. I think outbound is where you'll see more. You'll see more of people like us buying assets that we like in places like Europe and US and Japan and Latin America, because I think that's where we buy true capability that we may not have today.
At the forum, you've got government officials from New Zealand, government officials from Poland, trying to figure out the India IT story and trying to see how you can actually, mutually benefit each other. But are we really going to see newer markets beyond the ones that we've been talking about over the last couple of years?
Yeah, I think it's quite clear that the opportunities for us are going to be beyond our current. And if you look at it both from customer perspective, I think there is a huge market beyond the Fortune 500. There is an SMB market which we haven't tapped. Geography-wise, if you look at it, just UK and US as for our industry, while companies are different, constitute almost 75 to 80% of our business. That means we haven't yet penetrated. So it's not a zero-sum game. And as we go forward, I think we will have to enter those new markets. So we have Japan here, and to the point that Noshir mentioned, Japan was never present here. and today just one company has more than 10,000 employees through acquisition. So I think it's great news that they are establishing their bases here, which sends a very strong message. Now the second largest and the third largest country economy, which is China and Japan, is less than 3% of our market today. So I think so these two geographies have to be a focus, and I think would need very different strategies as compared to the ones that we have used in the West. So today when we are really talking to New Zealand or Poland, I think the new model for us is really going to be an hub and spoke model, where India becomes the hub and we will have beachheads in Latin America, in East Europe, in Europe, where country language skills and proximity will happen there, and the delivery will happen through a joint model. Then I think so a partnership with Poland or New Zealand or Latin America would be on that basis.
But Chandra, is this like the 5 to 10 year horizon, this search for new markets, and the new markets actually delivering and adding to the revenues for you guys? Is this really going to be the next 5 to 10 year horizon that this will start kicking in?
I think you should look at it from a multi-dimensional view. One definitely is expansion into the current markets. We still have not exhausted those markets, and there is a lot needs to be done, both in terms of new clients and also what we do for existing clients. In that, I would like to single out the opportunity to create new business models. And you call it alternative business model, you call it platforms, you call it products, whatever you want to call it. I think there is going to be an emergence of new ways of doing things, and each one of those is going to drive lots of revenue. You can call it $100 million sales, or you can call it $1 billion opportunities. I think that's going to play out in the next 2 to 5 years.
Okay.
And there are plenty of opportunities in those areas, and that will play out even in the current markets. And definitely, whether it is in Japan, whether it's in China, I mean, why go there? Even if you take continental Europe, we're pretty small. As an industry, our penetration levels are pretty low. And entire Middle East and Africa. See, if you can crack some of these business models, I'll tell you the beauty of the new business models is that you can offer those things in different parts of the world, because they will not be as people intensive as we are currently today. And we should be able to hire locally, train locally, but then own the intellectual property and offer different types of services. So Middle East will play a part, Latin America will play a part. So I think there are multiple dimensions in which to cut this whole game.
I know NASSCOM got a lot of criticism for not being aggressive enough to try and push through India's cause as far as the IT business is concerned. You talked about the elections, crucially in the US, where once again we've seen a lot of rhetoric. Whether any of that is actually going to translate into legislation, we don't know. But do you believe that the time has now come, and there was an editorial this morning as well which said that you need to drive the message into these markets?
Yeah, so I think
be proactive, not reactive.
I think the world is changing. I think if you look at the US, it's on a 2-year cycle, right? And I think we will have to accept the fact that till jobs comes back there, and our industry, which is people-based, will always be an issue. But underlying, they all realize that we add value, we help their countries become competitive. And I think in these areas, we work very closely with our own government, right, to ensure that our message gets through. They have started, I think what we have been doing, whether call it proactively or reactively, I think it started making a difference, where the issue is no longer an Indian issue. It's actually US companies which have started mentioning that their business is getting impacted because of the current rhetoric. And I think the fact that we are now a global industry, right, I think there would be all these stuff that will continuously be highlighted. It's election here, election there, right? And we'll just have to deal with it on a day-to-day basis. And I think we are very well equipped today. Our presence is in 60 countries. I think we are very well wired, and we've got chapters.
Yeah, but it hurts you when the L1 visas start getting rejected, don't
I think it is true. It hurts because of the uncertainty, for the same reasons that you approved yesterday and today you don't, right? I think, so we are very okay by their defining the processes and the conditions under which we'll deal with it and get used to it, right? But today, for the same things that we were given visas till yesterday are today being denied. And that's our issue today.
Okay.
And closer here, I think the government is very supportive. You heard Mr. Sibal this morning about it. We do have...
the government's got a whole bunch of other problems to deal with.
No,
I don't think the IT's budget wish list or your demands are going to be priority
we have
for the
actually
government.
very little demand to make. We're just saying this country needs a message about positive business environment.
Yeah.
It doesn't cost them money. It's
Yeah.
not a revenue stuff. And we do hope...
Don't talk about censoring the web
Yeah.
when you come to NASSCOM. You can talk about it outside NASSCOM. Don't talk about it when you're at NASSCOM.
I think it's a very positive statement. This is not about NASSCOM. This is internationally carried by you. And I hope that the message has gone and to the rest of the world that we mean it.
Okay. Chandra, political or regulatory risk, how high is that as far as your list of challenges go at this point?
It is a challenge. It is a challenge. We have to be watchful. As you rightly said, when the visas get rejected, you need to figure out a way of executing your projects. I've always said that getting visas and staffing people on projects is one step. It's not the only step in the whole execution cycle. But it takes a tremendous amount of time in working out alternatives and planning for resources, etc. So that will continue to be so.
So you can't really be as sanguine about it and say, we'll deal with it the day it happens.
Yeah, I'm not so mythic.
So what I'm taking away from our conversation here this evening is that it's not looking bleak as far as the outlook is concerned, that you guys really believe that things are going to get better, and the next 5 to 10 year opportunity looks much bigger and much brighter than perhaps the decade that's just gone by. So deal with the uncertainty in the short term, and you've got a good picture and a good story going for the long term. Gentlemen, always a pleasure speaking to you. Appreciate you joining us here on CNBC TV 18, and we wish you the very best of luck with everything from IT budgets to regulatory and political uncertainty. With that, it is time for us to wrap up the CNBC TV 18 special. From all of us here, many thanks for watching.